Hi everybody. In preparation for exam number 1, you will need to thoroughly review chapters 12 and 13. In the next few videos, we'll work some example problems that will cover some of the chapter 12 information tested in the exam. Your study of chapter 12 should not be limited to these practice problems, but they will help you get started with your review of the chapter. Let's work some trading securities and available for sale security problems. At December 31st, 20X1, Hull-Myers Corporation had the following investments that were purchased during X1, its first year of operations. Classified as trading securities, we have security A and B. You are given the cost of those securities. You're given the fair value at X1 of both securities, and you're given the fair value at X2 of both securities. When given a list of securities grouped into categories such as trading securities, held to maturity securities, and available for sale securities, a good place to start is to find the total of the information given for each category. In this problem, the total cost of security A and B is $1,005,000. The total fair value at X1 is $1,010,000, and the total fair value at X2 is $1,035,000. At what amount will the trading securities be reported net on the balance sheet as of 12/31/X1? And when I say net here, I'm talking about the cost of the security plus or minus the fair value adjustment account. For all of these problems, please listen to the problem, then pause your video to figure out the answer, then start the video again to check your answer. Trading securities will be reported at fair value on the balance sheet. So at X1, we will report a total value for these securities of $1,010,000, and that will be a combined value of the cost of $1,005,000 plus the excess of fair value over the cost of $5,000. What amount of unrealized gain or loss would Hull-Myers report for the year end 12/31/X1? This is something I really want you to pay attention to, and that is the amount of unrealized gain or loss to be reported is the amount necessary to bring the fair value adjustment account up to its correct ending balance. Write some T accounts. They will help you from coming up with the wrong answer. So the balance of the fair value adjustment account for these securities at 1/1/X1 was 0 because of two reasons. This is the first year of business for Hull-Myers, and they bought these securities during X1. So there couldn't have been an adjustment in the fair value adjustment account prior to purchasing these securities. We do know that fair value at X1 exceeded cost by $5,000. So we need a debit balance in the fair value account of $5,000. Therefore, the amount to bring its 0 balance up to the correct ending debit balance of $5,000 is a debit of $5,000. So the unrealized gain that Hull-Myers will report for year ended X1 is $5,000. Should the unrealized gain on these trading securities be reported in net income or in other comprehensive income? Unrealized gains and losses on trading securities are reported in net income. What is the necessary journal entry to record the unrealized gain or loss at X1? Debit the fair value adjustment account and credit investment gain on investments, unrealized gain on investments reported in net income, $5,000. And that's because this is $5,000. At what amount will the trading securities be reported net on the balance sheet as of 12/31/X2? Looking back up at the original data, the fair value at X2 is $1,035,000, which is $30,000 more than the $1,005,000 cost. So the trading securities will be reported on the balance sheet at 12/31/X2 at $1,035,000 fair value, and that's comprised of the balance in two accounts, the cost and the fair value adjustment account. What is the amount of the unrealized gain or loss Holmeyers will report for year ended 12/31/X2? Again, it is so important to remember that the amount of unrealized gain or loss to be reported is the amount necessary to bring the fair value adjustment account up to its correct ending balance. Fair value exceeded cost by $30,000 as of 12/31/X2. We had a beginning balance in the fair value adjustment account of $5,000 debit, and that came from our T account up here. After making this journal entry at 12/31/X1, our balance in the fair value adjustment account at X1 was $5,000 debit balance. So the beginning fair value adjustment debit balance of $5,000, and we know we need $30,000 at the end, which means that we must debit the account for $25,000 to bring the $5,000 debit balance up to a $30,000 debit balance. So what is necessary journal entry to record the unrealized gain or loss at 12/31/X2? Debit fair value adjustment, $25,000, and credit unrealized gain on investments included in net income, $25,000. And the last question I want you to think about is, how would your answers change if Holmeyers had classified the securities as available for sale instead of trading securities? Available for sale securities are also reported on the balance sheet at fair value, so the amounts reported on the balance sheet should be the same. The amount of unrealized gain would be the same. The unrealized gains, however, would be reported in other comprehensive income for available for sale securities instead of in net income. Well, that's all for this video. When we come back, we'll talk about bonds, investments in bonds.